Hi everyone, welcome to Risk and Regulation Rundown, the podcast where we share our views on financial services, risk and regulatory hot topics. I'm your host, Tessa Norman, and today we're recording a special bonus episode to share our reflections on the FCA's 5-year strategy and review of its rules in light of the Consumer Duty. I'm joined today by two expert guests, Sajedah Karim, who's a partner in PwC's Financial Services Non-Financial Risk business, and Conor MacManus, who leads our Financial Services Regulatory Insights team. So we're recording this episode the day after the FCA has published its new strategy, and that strategy sets out 4 areas of focus. And I think there's 2 of those that we'll probably spend a bit more time talking about because they feel particularly new compared to the FCA's previous strategy. So those are supporting growth and becoming a more efficient and effective regulator. And I think they really sort of signal the intention for a change in approach, in large part in response to the government's growth agenda. So, Conor, why don't you kick us off with your immediate reflections on the strategy and particularly on that sort of economic and political environment that the FCA is operating in, because I think that context is really important.
Yeah, of course. Thanks, Tessa. I mean, so I was at the launch of the strategy yesterday evening, spoke to a number of organisations that were there, and I think, headline reaction was very positive around the message, as you'd expect, that focus on growth and competitiveness being very, very welcome. But clearly this is a relatively high-level strategy. The real focus will be on the detail and how it's executed. So I think that would be the kind of very high-level and initial reaction. I mean, on the kind of broader context that the strategy needs to be placed in, I think, clearly the government has a very big focus on growth and encouraging growth. That is the central mission of the government. From a financial services perspective, it's one of its priority sectors that will be set out in the industrial strategy, which will be published at some point over the spring, summer, I understand. So clearly the government is prioritising financial services as a sector, which is understandable, bearing in mind its importance to the economy. For the regulators, they've had a secondary objective for international growth and competitiveness for a little while, but there's obviously been a lot of focus recently around what more they can do to encourage competitiveness of the financial services sector and the broader economy. So I think that's the context and the way in which has shaped the strategy and it explains the focus areas.
Thanks, Conor. And I think one point that really comes out of the strategy and that I wanted to get your thoughts on is the point around embracing technology. And the FCA uses the phrase a tech-positive approach. And I think in that respect, it's thinking both about its own operations and also how it can support firms to innovate and to harness the benefits of technology. Well, what are your reflections on that, and sort of what can firms be doing to sort of best position themselves to take advantage of that approach?
Yeah, I mean, look, it's obviously a really important agenda, and it's very positive that the FCA is prioritising it. I think you can probably apply 3 different lenses to this. There's probably more, but let's talk about 3. The first of which is, the FCA's use of technology itself. It receives enormous amount of data, oversees a huge number of organizations. So from a supervisory analytical perspective, there has to be scope to deploy technology there. Data analytics, AI, something that they're already doing, but it's great to see that they are looking to progress that agenda. I think the other area which is really important is the regulation of the use of technology by financial services firms. And I think, the regulators in the UK and the government have been pretty clear that they are not planning on doing specific regulation, for example, on AI, whereas obviously the EU has taken a slightly different approach to the EU AI Act. So I think that's welcome. We want a kind of pro-innovation regulatory framework. But I think the interesting point is the one that you made around positive towards technology, pro-technology, rather than technology agnostic, which has been the typical approach taken. And I suppose the question is, how are they going to be more proactive in the way in which they encourage firms to deploy technology, and what's the best approach from a regulatory perspective to do that? I think from my perspective, clearly very granular restrictive rules is not the right approach, but there might be areas where they want to provide some guidance around, existing regulatory obligations to encourage firms to have the comfort to be able to deploy technology safely. And then I think the final point is really about use of technology to reduce the cost of compliance from a regulatory perspective. This is something we're seeing a lot of organizations look at and adopt. Again, AI being a great example of something that can be used to reduce costs, to do things more efficiently and more effectively. So anything that the FCA and other regulators can do to encourage that and allow firms to adopt those kind of technologies, I think would be very beneficial.
Absolutely. And I think another really important element of the growth agenda is this point around rebalancing the UK's attitude to risk. And this is something that we've heard both the government and the regulator speak about it, in quite a lot of detail over the past few months. And there's been some debate around, the potential tensions that can exist between introducing greater risk into the system in pursuit of growth and competitiveness and consumer protection on the other hand. Sajedah, it'd be great to get your reflections here in terms of how you see those potential tensions. And do you think this strategy represents a bit of a lessening of a focus on consumer protection?
Yeah, great question, Tessa. Thank you very much. You talk about there being a debate on the kind of levels of risk, and I think there's been more of a statement that there will be a kind of reduced level of consumer focus. Let me explain what I mean by that. I think that what has been said is that there will need to be higher risk appetite, and that's it. And there hasn't really been that debate that you talk about in terms of what does that actually mean in practice. So what are we going to accept as risk, both from a kind of UK perspective as well as from a regulatory perspective, and then also from an industry perspective, and what actual kind of responsibility will there be for the consumer themselves. So I think that debate still has to be had in a lot more detail, and I think it's coming, and I think that's good, because a lot of what the regulator is suggesting it will now do I think is positive, but just needs a little bit more kind of detail. And Conor was saying the same thing in terms of the devil will be in that detail. And we'll come on to more of that in a second. I think on the consumer elements, on its last strategy, the FCA did talk about consumer duty and setting higher standards, and it's done that, and I think it's done that really well. And I think the consumer duty has drawn out a number of really clear areas where things were not working well, and it's drawn out lots of practices where you can help make things work much better for consumers. So I think that's good. Trust and the whole consumer agenda and the trust that brings and the empowering that brings of consumers, I think remains as an element in this strategy as it was in previous years from the FCA. So that feels relatively consistent. Again, I think what will be interesting is the detail of the debate on rebalancing risk. So they talk about rebalancing risk. What does that really mean in practice? And how much acceptance will there be by firms and everybody else on the dial of that risk? We've got some specifics we can talk to Tessa, but I think that's coming up slightly later on. So I'll pause there.
Thank you. Yeah, I completely agree. And I think there's a couple of sort of specific areas where the FCA has, given strong indications or indeed is working on specific proposals of where it's going to make changes to sort of help look at that rebalancing of risk. So, for example, it's looking at targeted support to help address the financial advice gap. It's also looking at reforms to its mortgage affordability and stress testing rules. What are your thoughts on, what sort of those types of reforms are likely to mean for firms, both their ability and their kind of willingness to either offer new products and services or to target new customer groups? What are you hearing from your clients about, how they would feel about taking on a greater level of risk?
I think it's early days, and it's again, there's a lot more thought that needs to be given to all of this. And Conor and I were talking about mortgage market reforms, for example. So the FCA may be looking at changing its affordability requirements, and that might create a great opportunity for firms to go, okay, so perhaps we can do something more with the money we have, and perhaps we can take a different type of risk and a different type of segment and a different type of customer, and perhaps this will help with financial inclusion. But actually, we still need to understand what the PRA are going to do and what the cost of capital implications are going to be for all of that, right? And Conor, I know you had some views on this as well, in terms of that entire kind of risk universe that needs to be considered before real steps are taken. So.
Yeah, I mean, I completely agree. It's, there can be, I think, a bit of a risk to kind of suggest that risk is set just by regulation. Clearly, financial services organizations are there to manage their own risk. That's their business. So it may be that organizations don't have an appetite to risk up or to get exposure to assets that they didn't previously. So might, and that's a kind of strategic decision that they'll have to take based on the whole regulatory landscape once it's clear. And absolutely, the FCA may have a position on something, but the PRA is equally important as a prudential regulator, particularly for the banks. And that's something that they'll have to consider, as well as investor appetite and all of the other things that firms will be used to taking into account. So I think this is just the one part of a multifaceted consideration that firms will have to take into account.
Thanks both. And Sajedah, you mentioned the consumer duty earlier, and it'd be great to sort of talk about that in a bit more detail, because alongside the strategy, the FCA also published its feedback statement to the call for input that it issued back in July 2024, which was really looking at reviewing its rules and guidance in light of consumer duty. So, a really important sort of stepping point in the journey that the regulator's on, sort of away from more prescriptive rules and towards a more high level, more outcomes focused regulation. So the idea being that that the regulator can place greater reliance on the higher level rules of the duty and use that to help reduce the length and complexity of its rule book. And what the regulator set out is what it calls an ambitious programme of reform, but that's really focused on sort of discrete specific areas. So it did say that the responses it had to the call for input, there wasn't really appetite for what it termed a sort of wholesale review of the handbook. But what's your take on that feedback statement and the areas that the FCA is looking to reform?
So a couple of things. So first of all, thank goodness it's come out, because I think everybody was really, really positive when the call for input was a thing in July 2024. And I think lots of people have been looking forward to where the FCA would land on this. So I think it's a very welcome publication. And I know that the regulator will have spent a lot of time and energy into getting it right. One of the standouts for me, and if I think about our experience of health assessments on consumer duty or helping firms understand what the implementation should look like, is that taking a proportionate approach and taking an outcomes-based approach becomes very difficult when you're not necessarily a large-scale organisation. So, and understanding where you should baseline yourselves is a complex and involved kind of decision-making process. So the FCA's focus on smaller firms, I think, in this space will make a real difference to some of those organisations who have been a little bit challenged about where exactly to land themselves. So I think that's really good. The disclosure elements of change, I think, are fascinating. Again, this is something that has been talked about for a very, very long time. And I think now really pushing forward with more tailored disclosure will be interesting. And I think will be very welcome. It's in practice, though, these things are really difficult and need to be thought through in a lot more detail than we currently have, and I know that is coming. So, for example, if I change my disclosures as a bank, what does that mean for what the intermediaries are doing, and do they realise that they will need to, and how long will that take to put in place, and what does the consumer expect? And if they've, for example, bought a car before and they're not getting the same disclosures, is there going to be a lot of kind of angst around that? That all needs to be worked through, and the disclosure across anybody's customer journey needs to be aligned. So we can't have different forms. And there, again, Conor made this point, it's not just one single regulator which will set disclosure requirements in this case. They all kind of need to be thought through in the round. So the detail of all of this and implementation of it will be involved. I think the concept of some of the things that the FCA has suggested for its call for input are great, are really good.
I think that disclosure point really sort of helps to bring to life some of the sort of challenges in this sort of more outcomes-based approach, where on the face of it, more flexibility sounds great, but actually when you delve a bit deeper to sort of some of the realities of that it will certainly bring challenges as well. And Conor, what's your perspective and what are you seeing among firms in terms of how they approach compliance as we move towards a sort of less prescriptive environment more generally? What are the sort of advantages and perhaps some of the challenges for firms?
Yeah, it's a very current issue, and when we've been discussing with clients of all kind of different types a lot recently. I think first thing to say is there's always going to be a rule book, right? And there's going to be lots of rules in that rule book. So I don't think we're going to move away from that completely. But the FCA and the PRA, clearly there's a trajectory away from very, very rules-based granular approaches that the EU uses for understandable reasons, because it's about harmonization across 27 different countries, to something which, as you say, is a bit more outcomes-based. Consumer duty is an example, although of course there are rules which underpin it. The operational resilience framework, again, was an example of that. I think, look, there's pros and cons, as there is under any framework. The benefits, as you say, is that it allows some flexibility in terms of how firms adopt a piece of regulation and ensure it makes sense for their business, which is really what you want to do. You want to align business and regulatory outcomes rather than it just be purely a compliance exercise they have to go through, because otherwise they won't embed it throughout their organization. Clearly not having thousands and thousands of pages of rules brings a cost reduction, because you don't have to kind of go through those rules in the same way. So there's benefits there as well. But the challenge is that inherent in a kind of outcomes principles-based approach is judgment. Firms need to make a judgment around how do they deliver the outcome that the regulators have set. And, frankly, for some organizations, that can be quite a daunting task, particularly for smaller organizations, have less capability, potentially less dialogue with the regulators. That can be a challenge. And, it comes back to this risk appetite point. They will need to, potentially assess their regulatory risk appetite. I think there's also a really important point for the regulators, which is, if you're going down an outcomes principles-based approach, there will be different interpretations. Firms that look quite similar will do things in a different way. And we've seen that in recent years in a number of different areas. And, there can be a tendency for regulators to look at that and say, well, that doesn't feel right. One's out of kilter from the other, and perhaps the one that's taken a slightly less restrictive approach should kind of move up to the level that the other organizations have taken, which just creates more costs, because they have to do it twice, because they take a judgment to say, well, this is what we're going to do it, and then supervisors come and look at it and say, well, maybe you might want to be slightly more in line with your peer group. So I think there's just has to be a recognition that there will be, to some extent, a lack of consistency, or more of a lack of consistency in an outcomes-based approach.
And I think that point around, more onus on firms to make more subjective judgments and to sort of justify their decisions is something that firms have already been grappling with under the consumer duty. And Sajedah, are there any reflections you'd share from sort of the work that you've done with firms on the consumer duty and how they've sort of found that?
I want to kind of answer that in a sense of the cost of kind of implementing the consumer duty. So when you're trying to figure out through every part of your process what a consumer has understood and how they've understood, and whether it's the right thing and whether they've reached the right outcome and whether you've got the right MI in place, etc., that's actually quite costly. So it makes the kind of customer journey itself more involved from a compliance perspective than it may have been previously. And I think some firms have grappled with, okay, how far do we go? Because now we're challenging ourselves on a product and kind of value perspective, because we're making it so costly in this customer journey. So there are multiple layers of where to land, question marks on where to land, dependent on what resource you've got in the first place. And I think that equation just needs to be brought in a little bit in terms of, to Conor's point, you might have similar firms kind of interpreting things differently, which makes sense because they're different businesses. But perhaps there's some kind of categorization around the level of resource, rather than the size of an organization or the size of customers it's got, but the level of resource and cost you might expect to be kind of passed on to a compliance journey or a customer journey in order to get consumer duty right, because it can take a lot of resource, and some firms just simply don't have that level of resource. So yes, I think it's been very tough for a lot of firms.
Yeah, absolutely. And I think for that reason, that's just one of the reasons why a lot of firms will find it so welcome that the FCA is focusing more of this, is putting more of a focus on sort of how it can be more efficient, how it can be more effective, how it can hopefully try and reduce the compliance burden on firms. Conor, I wanted to come back to your point around sort of consistency of approach, because I think that plays into another area of challenge for firms, which is sort of the risk of greater regulatory divergence across different jurisdictions. And that's something that the FCA touched on in the strategy. What are your thoughts on the FCA's perspective on that?
Well, I think, it would be impossible to ignore the geopolitical situation, and clearly they're not. And, regulators around the world are kind of grappling with that in different ways. I think, the UK regulators have always been, and I think remain, very, very committed to international cooperation and international standards. I know that the FCA is very active and influential in IOSCO and other forums, and clearly the Bank of England is as well in various forums. And I don't think that's going to stop. But clearly that global consistency is under pressure for various reasons. And being a regulator of one of the largest, most global financial centers in the world, it's understandable that they are thinking that through. I think, one of the points that they did make, which was interesting, was that they might look to, cooperate and coordinate with like-minded jurisdictions. So, potentially if you can't get international agreement, looking to coordinate and cooperate with other jurisdictions where they have a similar point of view. And I think that's interesting, and we'll see how that develops. But I think more broadly, clearly as a regulator of firms which operate globally, they'll be looking at these organizations to manage the risks around the global situation. And, as you say, from purely regulatory perspective, the fragmentation, divergence in approaches just complicates even further that regulatory compliance landscape. And again, makes it even more important to invest in the kind of technologies that are emerging, which can help you navigate what's obviously a very complicated picture.
Brilliant, thank you. So I think we've covered a lot of really interesting ground there in our discussion, and I think there's a lot of potential implications, but I think it's fair to say that quite a few of those, as you've both talked about, do feel perhaps a little bit further away, and firms will be sort of waiting for a bit more detail from the regulator before they can kind of fully work through the so what. So with that in mind, it'd be great to kind of conclude our discussion with a sort of final thought from you both in terms of how do you think firms should be reflecting on some of the sort of perhaps more medium-term implications, whether it be in terms of sort of impact on competition dynamics in the market, how they reflect on their risk appetite and their sort of broader approaches to compliance? What should they be thinking about now to sort of position themselves for those changes that we think are coming? Conor, I'll come to you first.
Yeah, I think there's so much going on at the moment, and the publication of the strategy is just one piece of a huge jigsaw of things. We had a number of announcements from the FCA and the PRA before the strategy earlier in the year in response to the letter from the Prime Minister. So we've got a number of specifics, and as I said, the growth and competitiveness strategy for financial services in HMT. So I think the first thing to say is take a step back. It's very easy to get lost in the detail. Obviously, you need to track the detail, but the regulatory landscape is shifting. I think that's clear. Think about that from a strategic perspective, because organizations that didn't do that, post financial crisis 2008, found that their business models became quite challenged because the regulatory landscape had moved and their business models hadn't. So I think that's probably a kind of pretty strategic point. I think the second point is there's a lot of rhetoric here about deregulation. And I think let's not get fixated on that as a point. The regulatory landscape has changed a significant amount. Expectations have been raised. Those expectations remain raised in many areas. So firms will still have a lot of work to do to be able to meet those expectations. And the risk environment in which they're operating remains quite enhanced. So for understandable reasons, regulators are pushing firms to be able to manage those risks. So I wouldn't lose sight of that. But then I think, we do have some detail in certain areas. The focus on technology is really, really important and really good. There are things that the FCA has said they're going to do, for example, to introduce a machine-readable rule book. We've talked about some of the emerging technologies which can be used to help facilitate compliance and reduce the cost of compliance. It's a massive opportunity for firms to embrace that agenda, but it requires investment, and that's what I think they should focus on.
Thank you. And Saj, what would you add to that?
I mean, I couldn't agree more with everything Conor said there, really. So, particularly this step back and think about your business model in the context of everything that's going on. I think Conor said it really well. I think the thing that I would also just comment on is this is all done in the context of innovation and growth. And it's yet to be, of course, it is yet to be proven which one of these changes is going to really encourage growth. One of the ones we haven't spoken about is authorization and making that whole process simpler and hopefully easier for firms. And the UK's presence in, I think they said Asia Pacific and the US, to help firms understand how they can navigate that authorization process, I think is a positive step. Some of these changes, such as easing the mortgage affordability rules, as an obvious example, and we've spoken a little bit about the complications of that, again, may encourage some growth. But in the context of this growth agenda, I think there's still a bit to be seen on how these discrete areas, as you called them earlier, Tessa, as they referenced them in their strategy document, how when they all come together, what really is the impact on growth and innovation. And I think there's still a little bit more to be seen on the impact that all of this will make on that agenda.
Brilliant. Thank you both so much for joining us and for sharing your insights. I think there's so much for firms to be reflecting on, as you've both talked about. So really fascinating discussion. Thank you. And to our listeners, I hope you've enjoyed this special bonus episode, and thank you very much for listening. Please subscribe to future episodes and please rate and review the series, as it helps other listeners to find it. As always, if you'd like to hear more from us on risk and regulation, please look out for our regular publications on our website, which we'll link to in the show notes. And I look forward to speaking with you again in our next episode.